Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space.
Hello. PACB has fallen from its high of $51 on February the 11th, a little over 1.5 months ago, to where it's trading today around $29. This represents a flash sale of over 40% discount, with an overall current weighting in the entire ARK Invest funds of 39th position and 4th within the ARK Genomics ETF. What is it that ARK sees in PACB that perhaps many investors are not?
Did you see one?
Just like ARK's Tesla bull case, they have dropped some serious breadcrumbs for us to follow and piece together. Let's drill into this and more. Stay tuned. Keep it simple. For those of you new to the channel, I am the Simple Trader. I am not a financial advisor, so please understand this is all for entertainment only. Full disclosure, I started building my position in this stock at a price of $25, and when I released my first deep drill on PACB back in January the 4th, it was trading at $26. I got very lucky in this play as it exploded up as soon as I bought in. I then sold half my position when the stock hit $49 after dropping back down from its high of 51. My remaining position is essentially house money, but since the stock has come back down some way, I believe it may be a good time for me to start reviewing whether I should be adding back more shares. No more plugging, let's start drilling. Fourth quarter and year-end results were released on February 12th, and the stock gapped up a massive 15% on these results. The main key takeaways were revenues in the fourth quarter topped the third quarter by a massive 42%, and even topped the year-over-year results by 3%. Considering COVID, that is pretty damn impressive. They placed 35 Sequel 2 and 2E systems during the fourth quarter alone. That suggests demand is increasing. Similar trend for gross profits were also reported. Key company highlights include SoftBank's huge $900 million investment to support PACB's future growth initiatives, a big multi-year collaboration with Invitae to begin development of a production scale, high throughput sequencing platform. This could be the start of something huge.
ARK and Pacific Biosciences, a biotech company working to decode the genetic footprint of the coronavirus.
A real-time surveillance system.
A system crunching data to identify what's changing and how well vaccines might work against those changes.
And then it can be used by the vaccine companies and by the health labs, the CDC and so forth, to study how effective vaccines are to those new variants, like the South African variant.
It's high-tech detective work, and PacBio just got $900 million from venture capital giant SoftBank for more tracking.
February 18th, PACB announces that LabCorp, a leading global life sciences company, has increased its commitment to highly accurate hi-fi sequencing with the addition of new PACB Sequel 2 systems. This is big, as LabCorp are actively using PACB systems to sequence genomes relating to COVID-19 variants for the CDC. This is proof of concept and highlights the genomic space is in full motion and in high demand. It may be surprising that the stock price has fallen so much, yet we see such a huge influx of institutional buying of PACB. In my last video update on February the 7th, the institutional ownership according to Nasdaq.com was at 81%, yet today the ownership has further ballooned to a whopping 90%. There are big players here, including Vanguard with a 7.7% stake, BlackRock with an 8.1% stake, and ARK Invest with a 15% stake ownership. This leads us into my drill on why I think ARK are so bullish on PACB and their big ideas report for 2021.
It's hitting exponential growth territory. We're talking about DNA sequencing.
DNA sequencing.
DNA sequencing. DNA sequencing. The genomic revolution.
Our geneticists, and you're going to have one, so am I, are going to be able to identify for the first time the needle in the haystack. They're going to be able to identify which genes in our genomes have mutated In other words, they've developed a programming error.
In ARK Invest's annual Big Ideas report for 2021, they highlight some key fundamentals that I see as breadcrumbs as to why PACB could rise up further and dominate the genomic sequencing space. The research from ARK Invest says next generation sequencing, though historically dominated by short read sequencing, will essentially lose market share to long read sequencing at a rapid rate. Why? Because long read technology offers superior accuracy, more comprehensive variant detection, and a richer set of features than short read platforms. By the end of 2025, highly accurate long and short read sequencing should approach cost parity. They estimate that long read revenues will grow 82% at an annual rate, from $250 million in 2020 to $5 billion in 2025. This is just disgusting, and perhaps the next slide will provide some insight. We can see that PACB falls into the third generation sequencing, and PACB are long read sequencing technology. This is probably why ARK sold out of all their positions in PACB competitor Illumina back in Q4 last year.
Sell it all.
The next few slides illustrates the effect of what they call Wright's Law, where the cost of long read sequencing they predict will come down drastically by 2025, the applications of which will be huge for further studying into cancers, rare and hereditary diseases, and structural variants. The market following ARK's research has a CAGR compounded annual growth rate of 82%, and this means that if PACB has this trajectory, it will go 19x over the 5 coming years. This is why I believe even if PACB captures a small part of this projected growth, we will still see both its company value and its future potential soar to new heights. To summarize, I believe that PACB is worth adding at this point, and so I will be looking to add a few more shares to my position, hoping the stock continues its decline. Anything under $30 is a good deal in my opinion, and anything under $25 represents great value. But if it somehow dips under $20, then oh my lord,
isn't that worth dying for?
I believe by the end of December, PACB will be trading around $45 to $50. If we take note of the 82% CAGR from ARK Invest, this should put PACB just over the $50 mark by the end of the year, and a 19x over 5 years, based on my initial price prediction of a 20x in 5 years when I first drilled into this company back on January the 4th. ARK Invest has seemed to align with me on this one. Just kidding. I guess by some luck I have made some similar projections to ARK Invest. Thank you for watching, and remember, I do have a position in PACB and I am seriously bullish, so please take my deep drill with precaution. Do your own due diligence and speak to a professional before you look to invest any of your money. The way the market is right now serves as a great reminder that anyone looking to start investing needs to prepare for the red days just as much as the green days. You can really take words of wisdom from Kathy Wood and apply it to your own investment strategy.
We're going to get opportunities to buy stocks. We lie in wait for those opportunities. Many people think of, because of what we do, disruptive innovation, that we're momentum driven. Absolutely not. We lie in wait.
Where stocks are surging, it is always good to at least take some profits off the top, so when times like these come, you 1. Won't be completely hit hard, and 2. You will have some cash to average down your entry point, or to just buy some more shares if your entry price is still lower. As an investor and not a trader, I am not worried about the current market state, and I'm pretty sure 1 year, 2 year, 3 year or 5 years down the line from now, the current correction won't even be a thing on your mind. If you are interested in WPG stocks that I have in my Freedom portfolio, please check out my other videos and consider subscribing to my channel so you can get all the information first. I am The Simple Trader. I try to keep this simple, and will simply see you next time.